Welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and today I want to be sharing the 61st update to the Anyone Can Invest portfolio. My goal of this series and this portfolio was to show what it looked like to build a investing or dividend portfolio from the ground up with $0. So every other week, I add $60 to this portfolio and start from scratch and check it all on this channel so you guys can follow along. But now, let's see where we left off. All right, and last episode, here is where we left off. You guys can see the cost basis total was sitting just around $305 for every single holding, all 12, in this portfolio, which is where we should have been. This episode, that's $310 per stock. Down here at the very bottom, you can see that the current portfolio value was sitting at $4,066.88, and the portfolio was actually in the green by $398.49, or up 10.89%. And the reason I sound so surprised by that is this portfolio just a couple weeks or a couple episodes back was getting smacked around like crazy. So it was really cool to see this portfolio rebound. And now we're going to see throughout this episode if we actually kept up with that or if we, fell back down or went up even higher. Who knows? We'll stay tuned. So next up, here's the thing. Deployed that $5 or, an automatic investment of about $5-ish into each of these 12 stocks on May 1st, which was this past Friday. And then here's the imbalance chart. So I did not, it's back on automatic investments. So I wasn't able to actually invest every single dollar and cent that was needed as close to that $5 mark. It automatically does it. The only one that's quote unquote out of balance is DDS or Dillard's. It's sitting at $308.95. Obviously, it should be at $310. $1.05 off. I could add that $1. I'll just wait 2 more weeks and then add whatever the difference is after that next automatic investment. But here we can see every other stock other than Dillard's is in balance, which we'd like to see. Next up, this is, I don't have a fancy name for this. I just call it the episode over episode momentum chart. So this simply shows last episode was episode 60. This episode is episode 61. And it shows where where each stock was sitting at the end of last episode in terms of total gain and where it's sitting now. So obviously if it's red on the percent change column, that means it has gone down since last episode, which you can see a majority of our stocks have gone down. So we did have a little bit of a give back, I guess. But I did have 3 of those 4 stocks that went up over the past 2 weeks. Did so by a lot. We have 5.66% from AVGO, which doesn't seem to ever really go down. Now that it's actually, back to where it was, over 100% return. Humana, which I think is or was my worst performer, up 10.66%. Intuit only went up 1.48%, but that's also one of my worst performers. And then STLD all the way down there at the bottom was a good performer. Now is a really good performer, was up 20.14% in just 2 weeks. That's nuts. So this chart, hopefully this, time's right and whatever. This chart shows the lifetime momentum of the portfolio. This is each individual stock, kind of like we were just talking about, but this is, putting it in motion. You can see the ebbs and flows of every individual stock right there. AVGO, on my screen anyway, AVGO took the lead. Once it took the lead, it really never looked back. It's had, a little stretch here or there where it's gone up and down and maybe have dipped a little bit. But once it took the lead around episode 40-ish, it's always been up there. Other companies have gotten close, but haven't passed it. So, there's the lifetime momentum. That's, like I said, each individual stock and how it's done so far. Now we're going to get into the best and worst performers. So right here, kind of what I was just talking about, AVGO is currently and has been for a while the best performer in the portfolio. We own 1.52 shares at an average cost basis of $203.68. In total, this position is up $330.75 or 106.83%. So we like to see that. That's pretty good. Now down here at towards middle, bottom, whatever you want to call it, Intuit, we own 0.509. So basically half a share of Intuit at an average cost basis of $608.49. And the current price is sitting at $399.04. So we're getting smacked around pretty good on that one. So I'm not really panicking though. What we're going to do, just like we do for all these stocks, we're going to keep buying it no matter what it's doing, too high, too low. We don't care. We just keep buying it. So that's, in this case, that's going to keep lowering our cost basis by pretty big chunks. and lower the amount we're down. And then when it does come back, if it comes back, which hopefully it does, we make money sooner off of it. So this one into it is down $106.61 or 34.43%. Down here at the very bottom, you can see the account total is sitting at $4,125.80, and the portfolio is in the green still by $395.89 or 10.65%. So next up, this is another video. Hopefully timing works out good for you guys. So this is the full portfolio performance that I just gave you. This is that mapped with a video visually. It's not just staring at a stagnant number. This is a live chart to show you ebbs and flows of every single episode that I record, which has been posted on YouTube. Again, there's going to be a playlist linked on my channel that you can watch every single episode, going from $0 when this portfolio first began to where it is now. So that's pretty cool. So you guys can see obviously ebbs and flows, bunch of bumps and stuff like that. So we've stayed on the ride. The only people that get hurt on a roller coaster are the ones that get off halfway through. So next up, we're going to look at the passive income received since just last episode. So since 2 weeks ago. So on the 24th of April, we had Humana that paid us 94 cents. Looking at their chart, you guys can see that 94-cent payment down at the bottom. The last payment from Humana was a 78 cents. So we're up, almost 20 cents since just the first quarter of the same year. So at the top, you can see in the red text, Humana has now paid us $4.21, which is 6.02%, basically 6% of the money received in this specific account. So then we go over to our next dividend payment, which was from ALG or Alamo Group. Same chart here. You guys can see that most recent payment of that 54 cents. The last payment from this one was from 48 cents. So we had a nice 6-cent raise there. Again, all I've been doing is buying. Sometimes they do dividend raises, which is typically our bigger jumps. But this one, ALG's paid us $2.42, 3.46 of the total, 3.46% of the total dividends paid in this account. And then lastly, this isn't really a position, so I tried to find like a quick way to summarize this. SPAXX is just interest on the cash sitting in the account. This one I'm just summarizing by year. Again, it's not really a position, but you guys can see so far in 2026, SPAXX has paid us 25 cents, and in total they paid us $2.80, or just over 4% of the total money received in this account has come from this interest position. So now we're going to round those numbers up, and we're going to check to see where we concluded April at, which is pretty cool. So we're already starting May at the time of recording. I don't think I've received any dividends yet for May, or I would have showed them. So April's now concluded, so we can check to see where we were. So you guys will see right there, April of 2026, we finished the month at $3.89. Which is 92.6% higher than April of last year. All the same holdings, all the same amount of money going in every single time. So to nearly double is pretty cool. So right now we're currently 31.3% off of the Q2 of last year, and we've only done 1 month. So we might break that number in May by itself, which is obviously cool, and then June would be all gravy. Another thing I'm noticing down here at the very bottom, you can see that we're already at $30.20, $2.52 per day, or per month, 8 cents per day, and we're only 7% off of what we made in all of 2025. That like I said, we just completed April. May hasn't started yet in terms of dividends received. So I'm very confident, or let's say pretty confident, like 70% chance that we'll break that record this month. We'll pass what we made in all of 2025 in May of 2026. And again, what we're doing here, just trying to raise the bar higher for the following year and the following year, and so on and so forth. So again, these aren't life-changing amounts of money, but we're starting from scratch, and it's going to be really cool to have this portfolio 10 years from now and be able to. It'll be worth tens of thousands, maybe even hundreds of thousands of dollars. Who knows? And we'll have a video going back to the first day when it was worth nothing. That'll be pretty cool. So anyway, really quick, we're going to look at the bonus investment track. We actually had a really good update to this one. So the current patty's sitting at $40.63. Our bi-weekly patty comes out to $1.56 per week, or every other week, I should say. The current cash balance is sitting at $13.84 while we wait for that to build up to $60 so we can do another bonus investment. Speaking of, that first bonus investment in this portfolio was done on January 9th, 2026. We now have a projected bonus date of June 28th of 2027 for that second bonus investment, which is only 535 days from that first bonus investment, which Obviously, that's a long time. But the first one took us 724 days. So we're getting close to knocking off 200 days between the first bonus investment and the second one. That's obviously really good. I think it'll end up knocking off more time than that. It's just like, we got to keep doing it and keep having, positive returns and results, and it'll drop more than 200 days. I'm willing to bet. Now, when will it happen? I have no idea. Stay tuned. So, lastly, and not leastly, I already have this up because I'm prepared this time. So this is my calendar. This is what's coming in May. If you look at the very top right corner, it'll say May 2026, and then it says $3.51. That's what it's projecting for May, which is really good because we were low twos last year. You can rewind the video and check. I'm not doing it here, but we were low twos last year in May. So to be at $3.50 in May for this one's pretty good. So it looks like Dillard's is going to be paying us on May 4th. We have MasterCard on May 8th. AbbVie on May 15th, and AbbVie's a really big payer. That's where a lot of our money is going to come from. That's our highest yielder in the portfolio. And then it looks like it started adding earnings in here if you guys are interested in that. ALG's on the 6th. The 21st is Dillard's with their earnings. And then our ex-dividend dates that we have to keep an eye on is CSL on the 18th and KNSL on May 29th. And then we're not going to get into June because it's not June yet. We have to, eat our food first. It's May, so go through May 1st. But anyway, I hope you guys enjoyed today's update. I'm going to try to keep doing these bi-weekly. Worst case scenario, I'm going to do these on every other week that isn't. So my monthly recaps come out at the end or the super beginning of the following month. So maybe these videos come out once a month and it'll be on that opposite bi-weekly period, if that makes any sense. I don't know. Anyway, but yeah, let me know if you guys still enjoy this series, if there's anything you want me to add or remove from the series to make it even better. But until next time, see ya.